The game of speculation is the most uniformly fascinating game in the world, but it is not a game for the stupid, the mentally lazy, the person of inferior emotional balance, or the get-rich-quick adventurer. They will die poor. I have been in Wall Street for 40 years. I have traded in bucket shops, and I have traded in the big houses. I have made millions, and I have lost them. And if you ask me what the secret is, I will tell you this. Men who can be both right and sit tight are uncommon. I found it one of the hardest things to learn, but it is only after a stock operator has firmly grasped this that he can make big money. It is literally true that millions come easier to a trader after he knows how to trade than hundreds did in the days of his ignorance. The reason is that a man may see straight and clearly, and yet he becomes impatient or doubtful when the market takes its time about doing as he figured it must do. That is why so many men in Wall Street, who are not at all in the sucker class, not even in the third grade, nevertheless lose money. The market does not beat them. They beat themselves, because though they have brains, they cannot sit tight. I have known many men who were right at exactly the right time, and began buying or selling when prices were at the very level which should show the greatest profit, and their experience invariably matched mine. That is, they made no real money out of it. They could be right, but they could not sit tight. You must understand this. The big money is not in the individual fluctuations. It is not in the small turns. It is in the main movement. That is, the big swing. And the big swing is not a matter of reading the tape for a few points. It is a matter of sizing up the entire market and its trend. I remember Old Turkey, a man I knew in the old days. He had a wisdom that most men lack. When told to sell because the market was due for a reaction, he would say, "I cannot do that. I might lose my position." He knew that his position in a bull market was a valuable asset. He knew that if he sold, hoping to buy back lower, he might never get back in. The market might run away from him. To you, the modern trader, I say, ignore the small moves. Ignore the daily noise. If you have determined that the line of least resistance is upward, buy. And then, do nothing. Do not try to catch the corrections. Do not try to be smart. Be a fool who sits. The market does not care if you are bored. The market pays you for your conviction, and your conviction is proven by your ability to hold through the reactions. My biggest winnings were not made by my thinking. They were made by my sitting. Timing is everything, but timing is not guessing. I have developed a method. I do not buy a stock simply because it is cheap. A stock is never too high to buy and never too low to sell. But one must know when to buy. I wait for what I call the pivotal point. This is the psychological moment. It is the moment when the market has made up its mind. For example, a stock moves between 100 and 110 for weeks. It does nothing. It is accumulating. The impatient trader buys at 105, gets bored, sells at 102, buys again at 108. He is chopped to pieces. Tell me this doesn't sound familiar to you. I do not touch it. I watch. I wait. But the moment that stock breaks through 110 and does so with volume, that is the pivotal point. That is the whistle blowing. That is the signal that the line of least resistance has finally cleared. That is when I buy, not before. I may pay a higher price than the man who bought at 105, but I am buying certainty. He was buying hope. And once I enter at the pivotal point, what must the stock do? It must act right. If I buy at the pivotal point, the stock should move in my favor almost immediately. If it does not, if it hangs there, or if it pulls back deep into the range, then I am wrong. And if I am wrong, I get out. Speculation is a business of anticipation. But you do not anticipate the signal. You anticipate the movement after the signal. Many traders are too anxious. They want to get in at the very bottom. They want to buy at 100. But why? Why risk your capital on a sleeping dog? Let the dog wake up. Let it start running. Then jump on its back. Never argue with the tape. The tape is not a person. It has no emotions. It does not care about your opinion. It simply records the truth. If the tape says the price is going down, it is going down. No amount of analyzing earnings or reading reports will change that fact. I have made mistakes. I have bought before the pivotal point because I was impatient, and I always paid for it. Whenever I had the patience to wait for the psychological moment, the trade usually worked out. The market gives you signs, but you must be watching, and you must have the cash ready to act when the sign appears. If you are tied up in losing trades, you have no cash for the pivotal points. You are out of the game when the whistle blows. Let us talk about the quickest way to the poorhouse. It is a method used by almost every amateur I have ever met. It is called averaging down. A man buys 100 shares at 50. 2 days later, it drops to 45. He is annoyed, but he figures, if it was a buy at 50, it is a bargain at 45. So he buys another 100 shares. Now he says his average is 47.5. He feels smart, then the stock drops to 40. Now he is losing money on both lots, but he is stubborn. He buys another 200 shares. Now my average is really low, he thinks. I only need a small rally to get out even. This man is not a speculator. He is a fool. By buying as the price falls, he is fighting the trend. He is adding weight to a sinking ship. The market is telling him loudly and clearly that he is wrong. His judgment was wrong, the timing was wrong, but instead of admitting the mistake, he compounds it. My rule is the opposite. I never average a loss. I only average a profit. If I buy at 50 and it goes to 55, then I might buy more. Why? Because the market has proven me right. The line of least resistance is up. I am backing a winner. To add to a losing position is to trade on hope. To add to a winning position is to trade on facts. And then there is the matter of taking losses. A loss never bothers me after I take it. I forget it overnight. But being wrong and not taking the loss, that is what does the damage to the pocketbook and to the soul. A speculator must ensure that his losses are small. Small losses are just the cost of doing business. They are like the overhead of a shopkeeper. But a large loss? A large loss destroys your capital. And without capital, you are a soldier without a rifle. I have a rule. I never lose more than 10% on a trade, usually less. If the stock moves against me, I cut it. I do not ask why. I do not wait for the earnings report. I cut it. The decision to sell should be as automatic as the decision to breathe. If you hesitate, you are lost. Hope creeps in. And hope in speculation is a form of paralysis. Do not be a hero. Be a survivor. The graveyard of Wall Street is filled with men who were right, but refused to cut a loss. The speculator's deadly enemies are ignorance, greed, fear, and hope. All human beings are born with these. You cannot eliminate them, but you must master them. The average man acts in the market exactly as he should not. When he has a profit, he becomes fearful. He is terrified that the market will take his profit away. So he sells too soon. He satisfies his fear, but he limits his gain. When he has a loss, he becomes hopeful. He hopes the market will turn. He refuses to sell. He satisfies his hope, but he ensures his ruin. You must invert this. You must fear your losses and hope for your profits. When the market goes against you, you must be terrified. You must run. When the market goes with you, you must be hopeful. You must dream that this is the trade that makes your year. I have studied myself as much as I have studied the market. I know that I am weak. I know that if I listen to tips, I will lose money. I know that if I get too excited, I will lose my judgment. That is why I work alone. I do not want to hear what the partners in the firm think. I do not want to hear what the newspapers say. I want to hear only the voice of the market itself. The market tells me everything I need to know. It tells me the price. It tells me the volume. It tells me the power. If you cannot control your emotions, you cannot control your money. It is that simple. Every morning, I remind myself, the market is bigger than me. The market does not owe me a living. If I follow its laws, it will pay me. If I violate its laws, it will punish me. There is no getting even with the market. You cannot be angry at the tape. Being angry at the tape is like being angry at a storm. It achieves nothing and only clouds your mind. Discipline. That is the word. Discipline to wait for the pivotal point. Discipline to sit tight when you are right. Discipline to cut the loss when you're wrong. It sounds easy. It is the hardest thing in the world. But if you can do it, if you can conquer your own human nature, then and only then will the market yield its treasures to you. Study the tape, keep your counsel, and sit tight.